It seems like crypto media wants us to use terms like Ethereum killer. After all, that sells. And we're guilty of doing that too, to be fair. There's a long list of so-called Ethereum killer projects, and that includes big names like Solana, Avalanche, Phantom, Polygon, Polkadot, Cardano, many others, as you guys know. All of these offer solutions to the same Ethereum problems, which are low processing capacity, limited scalability, and of course, and notoriously, high fees. But truly winning against Ethereum requires higher volume, higher TVL, mass adoption, and better infrastructure. Look, ETH 2.0 certainly is taking its time, but it is on its way. And it's really going to be the ultimate test for all these altcoins that the media has labeled Ethereum killers. But the constant delays really have dampened spirits of the crypto public, let's be fair. So the question is, where does Ethereum stand right now? Is it fundamentally strong enough to stay afloat in this bear market? We are deep diving into Ethereum and ETH 2.0 to find out. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. We are a crypto investment research company. We have documented many 100x returns on coins and tokens that are top projects today, really before anyone else was even talking about them. And if you want to see our detailed process for researching such projects, then our new and improved Altcoin Buzz Access group is for you. Our plans start at $99 monthly. Be sure to click the link below for more information. Whether you're watching our content or other content on YouTube or elsewhere, take everything with a grain of salt and just realize that we are not financial professionals, so this should not be considered official investment advice. All right, let's launch right into this with a look at some of the problems that Ethereum is facing. For context, we're looking at the last 180 days in terms of price performance, so the last 6 months. And I think the price attests to the fact that no matter how much we may like Ethereum, unfortunately, and admittedly, it does have its issues. The use of DeFi and NFTs really went ballistic on ETH in 2021. Some of that enthusiasm has subsided though. Transaction numbers at the time went through the roof. However, it also caused a few negative side effects. Let's first consider what these may be. As you're likely aware, high gas fees were a major problem. The popularity of the chain obviously comes with that downside. Gas prices went through the roof at peak times. And just for reference, a sample here is the recent BAYC, that's Bored Ape Yacht Club Other Side mint. If you can believe it, people paid up to 16 ETH for a mint. Not $16, not $1,600, 16 Ether. And related to that, we have the problem of network congestion. So the communication between nodes is certainly not optimal. And as a result, smart contract execution slows down dramatically. Other problems include power usage. So the proof of work consensus mechanism is not as eco-friendly as the coming proof of stake or POS option. Disk space is also a variable because it becomes more difficult to run a node due to the network and the fact that it's so big now. And GPU prices, because to mine Ether, you need expensive GPU cards. And this led ultimately to the scarcity of GPU units and a price increase correspondingly. But with POS, again, proof of stake, there's no need for GPU cards anymore. However, the optimistically minded will be quick to remind you that there are no such things really as problems, only solutions. So with that mind frame and with that kind of positivity, that mindset, let's launch into what some of these solutions may be for Ethereum and ETH 2.0. Well, a big one is the merge, because this should take away many of the issues that we just described. This is the change, of course, from POW, proof of work, to POS, or proof of stake. This is a total shift in the consensus mechanism of Ethereum. The issue is that it's a change that is just seeing endless delays, because now, once again, the best we can hope for is late 2022 or maybe early 2023. And as a result, we're seeing two major things happening right now. First of all, the current delay may see people lose trust and patience ultimately in ETH, and they could start looking for other investments, frankly, and that could lead to an extended short-term price drop. Many layer 1 chains and even L2 solutions are collectively closing their minds to Ethereum. Avalanche, for example, saw a 100% increase in transactions in Q1 of 2022 compared to Q4 of 2021. And Q1 of 2021 to Q1 of 2022 saw a 10,500% increase. Solana saw a 9,700% increase. And Polygon, the L2 solution, boasts a 2,000% increase. Ethereum went down 58% in transactions during that same time frame. Then again, on the other hand, Ethereum processed 4.5 times more transactions than Visa in 2021. And here's another interesting development. A lot of other projects are seeing not only an increase in users, but perhaps more importantly in developers as well. After ETH, we're seeing Polkadot, Cosmos, and Solana with the most developers. Cosmos, Solana, and Near saw their number of developers just about triple. And another argument against the merge is that only 0.1% of ETH users own a grand total of 95% of all Ethereum. In other words, there's a lot of inequality in that wealth distribution. So in other words, 0.1% of ETH holders are basically in charge of integrity and pretty much validate all transactions. Normally, you wouldn't call this a proper sample of true decentralization. And the merge is the last step before ETH rolls out sharding. Now, this could happen in early 2023. According to Vitalik Buterin, this should provide a 4 times greater capacity to the Ethereum blockchain. Sharding should also solve the blockchain trilemma, or as Vitalik calls it, the scalability trilemma. Initially, Ethereum scheduled sharding before the merge, and this was to improve scalability. However, because of the L2 boom, now they focus first on the POW to POS transition. So what's the state of Ethereum right now? Well, ETH is still looking good. There's no imminent need to start selling off your Ether, at least not in our opinion. 2021, again, saw an incredible surge in both DeFi and NFT trading activity, and most of this happened on Ethereum. However, in Q1 of 2022, DeFi took a hit and saw a 1-year low. Nevertheless, Ethereum is still the absolute king of DeFi. TVL, for example, is at about $70 billion, which represents about 64% of all TVL in DeFi. And the BNB chain, currently the second biggest TVL, is sitting right now at about $9 billion. As you can see, there was a reshuffling of the metrics here after the fall of Terra Luna. But on the other hand, NFT trades and transactions keep going up, 153% compared to Q1 in 2021, and ETH keeps going steady as well. It's mostly Avalanche and Solana who are seeing the biggest growth at the moment. Another section that keeps growing in 2022, and one that we've been super bullish on, is the metaverse. And most of the metaverse projects are on Ethereum. The current top 3 are on ETH: Axie, Decentraland, and the Sandbox, shown here. And the last week of April saw some uproar and debate over ETH's treasury, and this closes in on $1.6 billion, which is a lot of money. However, almost 20% of that, or $300 million, the Ethereum Foundation invested in fiat, or at least in non-crypto investments. And the Ethereum Foundation actually brought this out in their recent annual report. And this upset quite a few people. They argued that ETH should only invest in cryptocurrency. But on the other hand, plenty of pundits thought it was a wise move to have at least a more diversified portfolio. I tend to agree with that. It can't hurt from my perspective, but let us know what you guys think about that move in the comments below. Okay, and now we're looking at the 2022 annual report. It's important to take a look at it, and to take the edge off, it actually looks pretty good, but what do you really expect? It's coming straight from the source, published actually by the source, and so there's going to be a little bit of bias here. Nevertheless, it still allows us to compare numbers from Q1 2021 and Q1 2022. Ethereum's revenue went up, first of all, by 46%. That's $800 million, so an increase to $2.4 billion. And these are all the transaction fees, of course, paid in Ether. But actually, they burned no less than 87% of that figure, or $2.1 billion. And that is done via the EIP 1559. So this implemented a burning mechanism, as you guys know. DeFi TVL saw an 82% increase from $49.1 billion to $89.5 billion. And the TVL, again, total value locked on L2s, increased by no less than 964%. That's from a pretty respectful $686 million to a stunning $7.3 billion. Arbitrum and Optimism were good for $15 million in fees between them, and these are the two most popular L2s. And active addresses saw a 4% increase, which is modest, but that's from 507,000 to 529,000 addresses. Staked ETH went up by 111% and is now at 12 million. So this is the amount of Ether that's already staked on the Beacon chain. And that's before the merge is anywhere even in sight. And the volume of NFT marketplaces, that's completely off the charts. It increased 19,290%. So in raw numbers, that's an increase from $606 million to, get this, $116.4 billion. Let's talk about the Ethereum ecosystem now. Here's where we can see stable coins rising. So the circulating supply went up by 188% and is now above $161 billion. Most notably, the algorithmic stablecoins did well, like Frax. However, of course, with the UST crisis, other stablecoins took the lead, like USDT and USDC. So although the market is not strong at the moment, there is no mass exodus from the Ethereum economy and the Ethereum ecosystem. And another worthwhile mention are the curve wars. So primarily stablecoin DAOs battle it out to increase their liquidity on Curve. There was $89.2 million on the table from DAOs to bribe CVX holders, and the yield on these bribes was over 40%. So as a result, the protocols like Yearn, Balancer, and even some others, they set up similar modules. The Ethereum ecosystem also saw some interesting new protocols join the market: Alchemix V2, Aave V3, and Syndicate Protocol. Another important update is the Ropsten testnet. That's planned for June 8th, so that's coming up pretty quickly. And the network is closing in on its final merge. And although the merge should happen in August, Vitalik seems to be keeping open the possibility for September and maybe even October. Old soldiers, but in this case, more importantly, old habits never seem to die. Postponing is kind of like second nature for Vitalik and the Ethereum team. And look, you can see his quote here, which is not exactly encouraging. Couple that with the fact that ETH saw miner revenue, which just reached a 16-month low. It's also, I guess, negative news, $861,000. And for context, the previous 16-month low was $937,000. That occurred on the 27th of June last year, 2021. So where is Ether heading? Well, it's down sharply today. Unfortunately, there's always a lot of speculation as to where the price of Ether is heading. Last year was pretty terrific. We saw a 7 times price increase to an all-time high of about $4,800. However, since then, Ether finds itself in some very choppy waters. A lot of the price direction is going to depend on how fast the merge will happen, and obviously also on sharding. But further delays will potentially have a negative impact on the price development. And other L1 chains may also gain ground on Ethereum, despite the fact that they may have some of their own issues. For example, on the 1st of May, Solana was down for 7 hours straight. So it's not like anybody else is batting 1,000. There are technological issues that everybody has to overcome. You may remember our recent video on Polygon. We looked at the good, the bad, the ugly. They have their share of issues as well, no doubt. But going from POW to POS may also see a change in Ether going from inflationary to deflationary. And this will only cement the need to keep or hold your Ether in the long run. What we candidly don't know is the possible impact a bear market may have on the merge, or on investors for that matter. The current ETH price is sitting around $1,900, and it's not really giving hopeful signals for the immediate future as far as a price increase, to be frank. Something many pundits expected with the merge. But now that the merge might happen in a bear market, that can totally change the formula. But on the other hand, the merge will have a positive impact. But will it be muted? That's what we're wondering right now. Being forged under difficult and testing circumstances may make it only stronger in the long run, but in the short term, it may not be all that spectacular in terms of price performance. But again, long-term predictions are positive. Bloomberg analyst Mike McGlone, he mentioned that $4,000 at the end of 2022 is very likely. On the other hand, Standard Chartered projects a long-term value ranging between $26,000 and $35,000. And by 2030, we could even see a price of about $75,000. But who do you believe in these situations? In short, long-term projections for Ether all seem to be positive, and the short-term future will continue to be choppy. Any way you look at it, the moment of truth feels like it's at hand for Ethereum. It's close. It will be important for the merge to sort out the gas fees and the network congestion issues, though. That's going to be very important, because the longer they wait with those problems, the more ground, really, other L1 chains can make up. And after that, rolling out the sharding should be, hopefully, without any further delays. Ethereum is still a powerhouse, to be clear, and the chances of this project to evaporate overnight are very slim. However, that's what we also thought about the Berlin Wall when it came tumbling down, and things can go fast. Just look at Luna UST and that collapse. It didn't take very long at all. But having said that, the foundation under Ethereum is still solid. The numbers in the 2021 annual report look good, and they do give reason to be optimistic. So it's essential for Vitalik and his team at this point to really keep their eyes on the ball to stay focused. It seems like 2022 will be an important year that could really make or break Ethereum's future. Let us know in the comments below whether or not you're optimistic about Ethereum and ETH 2.0 and the transition to POS. As you guys know, we always wish you the very best of luck if you choose to invest, but never official financial or investment advice. If you're still watching this video, it's been a bit of a longer one, then kudos to you. Be sure to like, subscribe, share, and hit the bell to receive notifications. Check out these other couple of related videos popping up right about now. Stay safe out there, members of the Altcoin Buzz Army. And as always, we do hope to see you again soon in our next video. Take care.